Hi, everyone. I'm Jeanette Mulvey, the Vice President and Editor-in-Chief of Crowe by the U.S. Chamber of Commerce. I'm so happy to have you join me today for this last edition of Crowe Strategy Studio. Today, we are talking about how to prepare your small business for tax season. Now, before I welcome our guests, I'd like to thank today's sponsor, Crowe, and our supporting sponsors, Dell, FedEx, Gusto, Iron Mountain, and Oracle NetSuite. We appreciate your partnership in this series. Now, in today's discussion, we will first talk about helpful end-of-year accounting practices that'll bring you into the 2024 tax season. We'll talk about the importance of trusting your relationships with your accountants and your other financial advisors. And we'll talk about long-term strategic planning versus tax preparation and the difference between those two things and why it's really important. We'll be hearing from an expert from Crowe Accounting in a little while, but first, I'd like to introduce you to our first guest, who is a small business owner herself. Dr. Ronak Mehta is a board-certified physician, and she's also the CEO and founder of a really cool company called Nerdbugs. Nerdbugs is based in Madison, Wisconsin, and Ronak is here to talk to us about her experience launching the business and how she has set herself up for financial success since the beginning. It's also kind of cool because her business is one of our America's Top Small Business honorees, so it's really exciting to have her here today. Welcome, Ronak.
Hi, good morning. Thank you so much for having me here today. Really, really excited to be here.
Yeah, thank you so much for doing this. So tell everyone about Nerdbugs. Like, what is Nerdbugs and why did you start it?
Nerdbugs is a passion project that, I had an idea for when I was still in medical school. At that time, I would see patients that were hospitalized or undergoing post-surgery treatment that would be gifted generic flowers and teddy bears. And I noticed that they would just be so quickly tossed aside and discarded. And at that time, I thought, how neat would it be to create something that was meaningful, that could help represent their health journey, whether they were going through something wonderful like overcoming cancer or recovering from surgery, or they just needed an extra TLC in their life. And so Nerdbugs are these adorable anatomical plush toys. So here's one of them. These are lung plushies that are used to provide comfort and joy to people when they need it the most. And, throughout our journey, we launched in 2018. And since then, our mission has sort of changed a little bit. It's gone from more of, instead of just a get well gift, how can we use our products to have meaningful conversations about medical and mental health? How can we help people understand their bodies in a really fun and quirky way that helps us celebrate our differences?
Now, so just so the audience understands, so what you create is these plushies that are in the shape of organs, like a brain or a heart, and that's why where the medical connection comes in.
Yeah, absolutely.
So we're here to talk about taxes. So let's talk a little bit first about just like most small businesses, you work with an accountant and a bookkeeper. So you have two different people that you work with. So talk a little bit about the importance of those relationships and how you chose both the accountant and the bookkeeper.
So from the beginning, and I think this is kind of how I run my business in general, I focus on long-term relationships. Like, who do I want to have on my team for a long period of time? And I think those relationships end up being super fruitful if you choose the right people from the beginning. And the way that I chose those people is that I focused on my core values of like trust, reliability, and people that were excellent communicators. Those were the biggest pillars that, I thought were important to me and continue to be important to me at this time. In the beginning, I knew that, my financial knowledge wasn't up to par to do all of these things myself. And so early on, I decided to outsource these things just to make things a lot more seamless.
Can you for those, we have people in the audience that already run a small business and have an accountant and know the difference between an accountant and a bookkeeper, but also we probably have people in the audience who are just starting their business. So can you just be specific about how you work with your bookkeeper versus how you work with your accountant?
Yes. So with my bookkeeper, I actually meet with my bookkeeper quite frequently. So I meet with my bookkeeper mostly on a monthly basis. And it's not a super long meeting, maybe like 15 to 30 minutes. And we talk about, I make sure that I give him all of the stuff that he needs to reconcile my books every single month. And so if he has any questions beyond that, or if there's certain transactions that he's not sure where they should be categorized or classified, then we'll sort of chat about it to make sure that they're done correctly. With my accountant, however, that I sort of view as more of a strategy session. We talk about, everything from inventory planning to when is it a good time to convert from an LLC to an S Corp? What are our goals for this quarter, next quarter? And then when it comes to scaling, like when is it appropriate and when do I have the funds to hire more people? When is it appropriate to start an SEP IRA? Like it's more of a strategy session with the accountant, where as with the bookkeeper, we just make sure everything's up to date on a monthly basis.
So it's really like the day-to-day with the bookkeeper, and then kind of more this long-term planning and the tax expertise with the accountant.
Yes, absolutely.
So speaking of tax season, because that's why we're here, can you just talk a little bit about the things that you are doing now and what that you do kind of in the fourth quarter of the year to prepare yourself for tax season starting in January?
So in a small way, I kind of alluded to this. I try to plan for tax season all year round. And by doing those tiny little steps, by, just meeting with our bookkeeper, 15 minutes, like 15 minutes a month on average throughout the year, and, a once a quarter meeting with the accountant, it kind of keeps things up to speed all year round. When it gets to closer to fourth quarter, what me and my husband tend to do, and what we've done for the last couple of years that seemed to work really well for us. My husband doesn't work for me or with me. He's a W-2 employee, and prior to Nerdbugs, I was also a W-2 employee and had my business. And so what we would do is we create these folders on our desktop, and we would take a look at what we did the year before and what documents were needed by our accountant. And so we would just start to gather all of those documents and separate them into folders of like what the accountant needed from him, whether it was W-2s, healthcare forms, any sort of like insurance forms, all of the things, and just organize them. And so when it was time for our accountant to kind of wrap things up and get started with our yearly taxes, most, if not all, of our documentation was already ready to go, and we just had to hand it off instead of scrambling to find it at the end.
So what you're saying is your husband doesn't work for you, doesn't work with you, but his financial situation is relevant to your business taxes that you're going to have to file. So can you just talk a little bit more about that? Because I think a lot of small businesses are in this situation either because they own a business and they also have a job, or they have a freelance position, a contract position, or because they're filing jointly and their partner has a full-time job. So can you just talk about the importance of keeping your business and your business and personal finances separate, and how you do that?
Yes. So from the beginning, like I actually didn't know that was a thing when I started a few years ago, that you're not supposed to commingle those. And I had one friend who was also an entrepreneur. And when I was first launching, I very much thought that this would be a side hustle that I was just experimenting with. And I didn't know it would be successful. So I just left those two accounts together. And she advised me early on, it does not matter if you foresee that this is going to be a successful endeavor or not. Do yourself a favor and set yourself up for success, and just make the accounts separate from the beginning. You already have possibly an EIN, or an LLC, to start that process off. You want to find a bank that you like and trust and start building those relationships and have a separate business banking account. It will make it so much easier, not only for yourself, but for your bookkeeper and your accountant as you grow and scale. And so I chose a bank that I felt like had, those pillars of like excellent communication and trust and those values that I thought that they would also help me grow with. And I got not only a business banking checking and savings account, but a business credit card. And that credit card has been super useful for me because I know that everything that goes on that credit card is a business expense, and I only use it for business related expenses. And so that in itself makes things super clean and clear right from the beginning.
So much, like we're here talking about taxes and finances, but so much of what we've actually talked about is relationships, whether it's with your accountant, your bookkeeper, and your bank and your financial advisor. So can you just talk a little bit about that, like about how more generally relationships have been important to your business and the financial stability of your business?
Yeah, that was a great pickup. I think that I've valued relationships across the board when launching my business. I think I was a little bit lucky because I used the power of relationships in my day-to-day medical practice, and I knew how, if you can build those relationships, it can really help in the long run to build that trust, to build that empathy, and get people on your side. And so from the beginning, I think one of the ways that relationships had helped me is because I didn't have any connections in the business space. But what I did was I did two things. I took chances, even though I felt like I was underqualified or not qualified. And I genuinely took interest in the people that could help me in these relationships. So I'll give you an example. In the beginning, I think 6 months after I launched, I had applied for Amazon's Small Business of the Year contest. Did not win that contest, but I was a finalist in that contest. And still until this day, I have a relationship with the small business team at Amazon. They are a massive company, and I've always felt like, how could they ever notice someone like me? But, I think because it wasn't about the contest. The contest doesn't matter. It's about really caring about the person on the other side and how can you help them do their job better, or what can you bring to the table that flourishes that relationship. And I've done that across the board, whether it's my relationships with Amazon or Chase or you name it. It's always about relationships. And then same with Nerdbugs on our internal team. I hire people that want to be there long term, want to grow and use their talents to the best of their abilities. It's not just about me. It's about like, how much impact can we make together?
I think also you worked with like a small business incubator or development center at the University of Wisconsin. Is that correct?
Yes. So this is actually, so thanks for bringing that up. Yeah. So this was actually with another pitch contest that I had not won. But from that pitch contest, I found a mentor. She had been following our story for a couple of years, and she was part of the Small Business Development Center here in Madison, Wisconsin. And she was a program director of the UW SBDC. And she came up to me and just had a chat with me. And she said that she really saw something great come out of Nerdbugs, and she would really love to be able to help and mentor me, in the future. And so now she has been just a great friend and advisor. And I also meet with her on a monthly basis. And so really, again, like nurturing those relationships and then taking chances. Like we've talked a little bit about like, I sort of touched base a little bit about like some of the pitch contests that I had been part of, whether it was through Amazon or another sponsor. And I've actually never won a pitch contest. I started doing pitch contests this year, and I've never won a single one. But my goal is never to kind of go in and win the contest. My goal is just to get a little bit better, a little bit more comfortable speaking on stage, and again, like, build the relationship. You really never know who you're going to meet, and if you kind of look at it through that lens of building relationships, staying open, staying curious, and taking chances, I think those things will really take you a long way.
That's great. So one last question before we go. You've talked about your failures and how you've made them work for you. Can you think of anything since you started your business that if you could do it again today, something you would do differently, whether financial or otherwise?
Yes. So a few things. One would be, I started taking, like, in this last maybe 2 years, I started taking a lot of courses on systems and processes, on running a business. And I've been a part of a lot of accelerator groups. And this has been just the last 1 to 2 years. That is something I wish I had done from early on, because if I was part of those, I think that would have helped eliminate a lot of the redundancy of, like, the growing pains. It wouldn't have completely eliminated them, but I think it would reduce them. So this year, I've learned how to build out proper systems and processes to, like, have our team be a lot, not only more efficient, but, like, work together in a way that brings out their best talents. So that would be one big thing. And then the second big thing that I would tell people is to try to seek out mentorships and take chances, just like I had just mentioned before. Those mentors can help you see things in a light that maybe you wouldn't have seen before. And so trying to seek out opportunities and mentorship in your local community can really go a long way.
That's great. Thank you so much. That's actually all we have time for. Thank you, Ronak, for joining us. It was really helpful and we appreciate it.
Thank you for having me. This was great.
Thank you so much, Ronak. It was great having you here today, and I'm sure our audience really appreciated hearing your experience. Now we're going to take our conversation in a new direction with an expert in accounting processes and procedural transformation, which sounds like a lot, but really she's just here to tell us how to make sure your business is ready for tax season. Please welcome Jana Kelly, CPA and Finance Transformation Partner with Crowe, where she specializes in providing client accounting services for corporations, nonprofit entities, partnerships, and closely held businesses across various industries. We're so glad you're here with us today, Jana.
Thank you. It's great to be here.
So first, just tell us a little bit about Crowe and what Crowe does.
Sure. Crowe is a public accounting firm. Like most public accounting firms, they have 3 different basic service lines: the tax, audit, and then an advisory consulting lane. That's actually where I sit, but I've spent my career working in all 3 at some point. At this time, I think Crowe ranks about 8th in the world in terms of public accounting firms. So while we are large, in the grand scheme of things, we also have some services that are uniquely curated for small businesses. So it's a privilege to be here.
Yeah, thank you so much. I think a lot of people are, now they're thinking about tax season and starting to get prepared. So today we're here to talk about tax planning. And before we get started, Jana, can you just explain to the audience the difference between tax planning and financial planning?
Yeah, sure. It's a great question because I think those two get confused at times. I mean, tax planning is really all about taking a look at the income and that you're expecting to have in a given tax year and planning to maximize all of the tax law to your benefit. It's very different from evading tax. Planning for tax is completely legal, and you should be doing that, of course, so that you can minimize the amount of tax that you have to pay. I mean, everyone has to pay something according to their income, but you want to make sure that you're not paying a dollar more than you have to. Now, business or financial planning is very, very different. Sometimes these two can even be in conflict. Business planning is how do you make your business the most profitable and sound, strong business that you can. You want your business to last a long time. You want to maximize your profits. You want it to be a very desirable business so that if you ever at some point want to sell the business or pass it along to a family member, that it has maximum value. And those two things are very different.
So can you talk a little bit more about that? Like, how do you make sure that your business is financially healthy for the reasons that you just stated, but also ensure that you're maximizing all of the tax planning benefits you can gain? Like, how do you advise small businesses to do that, to think about that, and how to start to prepare for tax season?
Yeah, it's all about planning. A lot of things need to be done prior to the end of a given year. So in this case, before December 31st, 2023, your efforts, or the small business's efforts at tax planning should really be completed. Because if you are going to, let's say, buy another piece of equipment or have any additional income or expenses hit towards the end of that year, you want to have that happen before the year is over, because that's how tax years work, assuming everyone has a 1231 tax year. But financial planning is really very different. That is usually something that you're thinking about in terms of the health and overall, hygiene of your business, how it looks to an outside investor or lender. So last minute tax changes that you might make might be, having additional deductions in order to lower your taxable income. Now, again, those things are in conflict, right? Because if you have a last minute deduction, that does lower your taxable income, which is also the profitability of your business. But you've got to keep those two things in balance. They're going to be happening at the same time. And by working with a qualified tax CPA, you can both ensure that your business is paying as little tax as it has to, and at the same time remains healthy and strong.
So you mentioned tax deductions. Can you talk a little bit more about the kinds of tax deductions that small businesses might overlook?
Yeah, sure. We get a lot of questions about, what's deductible. And frankly, the tax laws changed quite a bit particularly during the pandemic. For example, the way meals and entertainment were treated is differently than the way it is today. So we get a lot of questions about, is this deductible? What have I overlooked? I would say that the most frequent questions center around how do you handle vehicle expenses, mileage expenses, again, meals and entertainment. All business owners are looking for everything that's deductible, but that which is ordinary and necessary to doing business. You want to be very careful that you don't create deductions just for that sake. Right? You want to make sure that these deductions are true and sound and really are part of doing business. And that's for two reasons. One, you don't want to get in any trouble with the IRS, but two, you want to make sure that you're not artificially lowering your taxable income just for tax purposes, which, as I said a minute ago, hits profitability. But the one probably most overlooked is really around depreciation. There's a lot of confusion there. Depreciation is an area where a business owner can make some decisions, especially before the end of the year, that can really change the taxable income of the business. Sometimes another one that we'll see is around, using of cell phones but those are pretty small deductions in the grand scheme of things. And then the last one that I would say is that people overlook is the qualified business income deduction. That one is, new in the grand scheme of things. It's not, a fairly recent one, but it's one over the past 10 years or so that has really come on the radar. And it's really an effort to give a small business owner the ability to be treated a little bit more like a corporation with corporate tax. And so there's an additional discount given. And that's one that you definitely will want to talk with your tax CPA about. How can I maximize my qualified business income deduction, sometimes called QBI? Definitely a great one to look into and often overlooked.
That's great. Can you just talk a little bit more about depreciation? Because I think people might be a little bit confused by that, especially if they haven't purchased a large asset like a vehicle or something like that. So what is depreciation? And is that always something that you take over a number of years, or can you do it all in 1 year?
Yeah, depreciation is a great way to handle, a taxable income issue like we talked about without damaging the profitability of your business, because you can do that strictly for tax purposes and the finances of the business don't change. So here's how depreciation works. Let's say you buy a big, $100,000 piece of equipment. The business buys a $100,000 piece of equipment. Well, the way that works is you're expensing it over the life of that business. The value of that piece of equipment to a business owner may be felt for 10 years. You don't use that equipment in that year and then throw it away, right? So it's not like a regular expense that is happening in that year and then is over. The usage of that equipment stretches for some time, depends on the equipment. So we'll just use, let's say 5 years, for example. And so what that means is when you put that asset on your balance sheet, it is expensed on your P&L, which is where your income, your taxable income is calculated, is expensed over 5 years. So in this case, you would get to expense $20,000 of that equipment every year. So you're going to lower your taxable income by $20,000 in this very rough example. But what the IRS allows a small business owner to do is accelerate that depreciation. So there's some rules here. You're going to want to talk with your tax CPA about what can be accelerated and how it works. And sometimes it's called bonus depreciation. But on a high level, the idea is you might be able to fast track that expense. So rather than stretching it out $20,000 a year for 5 years, you may be able to take the whole $100,000 in the current year. And this goes back to the idea of really doing some tax planning. You could buy the equipment on, let's say, December 15th, or you might want to buy it on January 15th. And that could be the difference between a big tax impact or not. So let's say a business is already functioning, let's say at a loss in the given 2023 tax year. They may think, I don't need the additional deduction this year. I'm going to hold off, buy that equipment in January, because I'm expecting a big year. I'm going to have great income. I've got this great contract coming open that I'm going to be working on. So I'm really more worried about next year's taxable income. That's tax planning. And then you can take that accelerated depreciation. So it can be very confusing because it seems like, hey, I spent $100,000. Why am I not taking that whole $100,000 expense automatically? And that's because it's an asset that has a life that's longer than just, let's say, that meal and entertainment expense that's over in a given year. It certainly doesn't stretch over multiple years.
So you mentioned the difference between tax planning and long-term strategic planning, but I really want to emphasize that again, because you were saying that you wouldn't want to make a purchase or have an expense specifically just so you had a tax deduction, that it needs to make sense for your business. So can you just talk a little bit more again about long-term strategic planning and how that is different than tax planning?
Yeah, I think this is probably the most important thing for any business owner, that I would stress. Don't be short-sighted and thinking only about the tax impact, just like you said. Most of the time when I get a new client, the very first question I ask is the last one they think to talk about. And that is, what's your exit strategy? Where do you want to be in 5, 10, 20 years? Where do you want this business to be? Are you planning to pass it along to a family member? Would you like to someday be acquired? Maybe someday you're going to go public and issue an IPO. It depends. Every business is very different. And you want to think about that long game. So if you focus too much on taxable income and you're constantly looking for ways to, reduce that taxable income because you really hate to write that check. And I get it. Writing that check to the IRS, it's not fun. It can be painful, right? You just feel like you're constantly writing them a check. But at the end of the day, tax is going to happen. We all pay into the system. This is how we have all the services and things that we have in the United States. So you want to think about, what's my long-term goal for this business? Because if you keep reducing that taxable income in an effort to avoid tax, and then let's say your business, it's growing and growing and it starts to plateau and you go, if I had a loan, I could buy a little bit more of this. I could, grow into another state or what have you. And then you take those financials to a bank and they say, well, it doesn't look like you're very profitable because you've always been focused on reducing that taxable income. Then you're going to reach a ceiling and your ability to grow and go to the next level is going to be inhibited by the fact that you've always been focused on tax. Or I've even had clients who will buy objects, equipment, like we just discussed, in order to reduce taxable income, but maybe it's not needed. So expenses shouldn't be made simply to reduce. It sounds obvious, but it can get really tempting when you get to the tax time. And we're getting very close, right? So businesses right now, I hope everyone listening is spending time talking to their tax CPA. They're making those plans. Perhaps they're an S Corp and they're looking at taking that final, paycheck as the owner of the company and how much am I paying myself and so forth. All of these questions are going to lead you to taxable income that we hope enables the small business to pay only what they have to the IRS or other state body.
I think that's a really good distinction. So thank you for making that point. Last question for you is, as people are, if they're looking for a new accountant or they're looking for their first accountant, what are some of the things they should be looking for when they're choosing an accountant?
Yeah. We, here at Crowe, we do get a lot of, requests for, right, like from a small business, hey, I'm looking for a CPA to help me with various areas of the business tax, consulting, what have you. And, what we hear a lot is that they've come from a prior, maybe they're a new business, but if they've come from a prior CPA, they've outgrown them in some way. So to the best of a small business's ability, you really want to find a tax CPA that can grow with you over time. So that means you want someone who's experienced, certainly, right? You don't want to find someone that's not familiar with your industry or the type of work you do. You definitely want to make sure they stay current. I just mentioned a couple of tax law changes that happen over time. And if you find someone that doesn't do the hard work of going to different trainings and so forth, and I would ask that, what do you do to stay current? Ask your tax CPA. It's okay to ask that question. How do I know that you're staying current with whatever the latest state and federal tax law is? And then again, to the point of growing with you, you want to find a CPA that, in my opinion, especially if your small business is going to be around a while, you don't want to find a tax CPA that's maybe looking towards their own retirement. A tax CPA business that has been around a while and is not going to be here in the next couple of years. Then you're going to have to start over with someone explaining the nuances of your businesses, getting to know them and that type of thing. So I would find someone that's in it for the long term with you, because I think you'll be happy. And the other thing I would be really careful about as you choose that tax CPA is be wary of, your friend's CPA and tax advice. If someone says, hey, you should try my CPA because I never pay tax, or, whatever kind of stuff, don't rely too much on that. Really look for someone that has a good reputation, who's going to give you good sound advice. Because again, you want tax deductions. It's fair to have tax deductions. There's nothing to be afraid of. However, you don't want someone that pushes you into something aggressive, because at the end of the day, that could put you in a very dangerous position. And as we said, it doesn't help your business in the long run from a, healthy financial statement perspective to outside lenders, or maybe someone who wants to come invest in your business at some point.
Right. I think that's an excellent point. Think long term. That's all we have time for today, Jana. So thank you so much for joining us.
Absolutely. It was a pleasure to be here. Thank you.
Thank you. It was great advice from both of our guests today. So thank you again to Ronak and Jana for joining us for today's Co-Strategy Studio. We hope you, the audience, found this really helpful. And I hope you come to growwithco.com for all of our tax advice and articles. I'd like to also thank today's sponsor, Crowe, and our supporting sponsors, Dell, FedEx, Gusto, Iron Mountain, and Oracle NetSuite for helping us bring you this program. You can join us at growwithco.com, and you can also find us on Instagram, Twitter, Facebook, and Flipboard for more information. And we'll be sending you an email after this event with links to some of our tax articles. Thank you also to all of our chamber members who joined us today. We're excited to have you here and to bring you more in our upcoming Co-event series. Everybody take care and have a great holiday season.